Over 1 million people around the world follow Wall Street veteran Mark Chaikin for his shockingly accurate stock market predictions, and he just gave them a dire warning. Mark says we're about to witness a historic stock market shakeup that could soon create devastating losses for investors who don't know what's coming. And as a result, you only have 90 days to move your money. You see, Mark spent 50 years on Wall Street at some of the most prestigious hedge funds in history, and he's been on Fox Business and CNBC countless times. But this is a financial story no one else is telling. And if you let this take you by surprise, you could be in for a world of pain. He explains everything in a brand new free report available at rollingcrash.com. He includes the name and ticker of a popular stock that could be directly impacted by what's happening as well. Mark warned of beloved pet brand Chewy before it fell 45%, tech company C Limited before it fell 66%, furniture company Wayfair before it fell 76%, social media favorite Snap before it fell 36%, and food delivery company DoorDash before it fell 65%. Mark even called the Amazon crash before the famous FANG stock fell 35%. So you'll want to avoid the stock in his new report immediately. Again, simply go to rollingcrash.com for your free copy of this new report. Hi, this is Daniela Cambone. Welcome back to the Daniela Cambone Show here on Stansberry Research in person with my guest today, Josh Crumb, CEO of Abaxx Technologies. Josh, thank you for making the trek in New York City amidst these storm clouds and dust, forest fires, bringing all this horrible air pollution to New York City. So thank you.
Absolutely. Thanks, Daniela. Good to be back.
Yes, so lots of ground to cover. First of all, I should also add, apart from being the CEO of Abaxx Technology, you are also a serial entrepreneur, having created and taken off 4 companies publicly in the span of a decade. Like from creations on paper napkins, on cocktail napkins.
Yeah, one of my shareholders said no cocktail napkins is safe. I'm that crazy guy that has that idea at the bar and you just keep running with it rather than letting it go.
Well, I also want to add, you're a former Goldman Sachs employee. You were the head of metals research there. So obviously I want to talk to you about metal prices later. So like I said, a lot of ground to cover with Josh. But first, Abaxx, you guys will be the first ever U.S. listing for SIBO on their new global listing platform, which will looking to compete with NASDAQ and the New York Stock Exchange. Tell us about this. What does this mean? What does it involve?
Yeah, this is super exciting, and we're quite honored, of course, with an institution like SIBO. To be the first ever listing on a global platform. So it's we are actually already listed on the SIBO in Canada,
right.
In that they acquired the NEO exchange, and that was the only piece of the SIBO that actually was working with issuers. So something that a lot of people don't realize is SIBO is already one of the largest traders of equities globally. So they're I believe they're the top trader of equities in Europe. And I think they've got over 20% market share against the NYSE and the NYMEX in the U.S. as well, but they have not been known for actually taking companies public. Mm-hmm. And so now they're rolling this out, but not just in the U.S., but being multi-jurisdictional listings across the U.S., Canada, eventually the UK, EU, Australia. So it really is going to be a global platform for listing equities.
The question is, why do we need another exchange, Josh?
Yeah, I think, look, as an entrepreneur, as you mentioned, I've started a number of companies and taken them to that listing phase. I think from an issuer's perspective, it actually really does matter that the service that you get from an exchange and I would say in the exchange landscape overall, and I'm sure we can talk about our business and the commodities exchange as well. These exchanges really, they're although they're obviously amazing. Drivers of capitalism, they themselves are, can get very comfortable and almost having sort of monopolistic type tendencies. Right. So I think, like anything, competition is good. Servicing clients is good, and I think the SIBO is doing a great job of growing into, being a competitive platform.
When you say competition is good, how do you think it can have the NASDAQ and the New York Stock Exchange get better? How could it push them and everyone to just get better? Is it in terms of compliance or more than that?
Yeah, well, look, I think they're already probably fiercely competitive, right? The NASDAQ
Yeah.
and the NYSE,
Right.
and I think that does help, and that's not the same in all markets, right? Not all markets have that competitive dynamic that the U.S. does. If you look at some of the almost national exchanges in many markets, so again, it's just having competition for issuers, and again just upping the game as far as it's the way they work to get the story out, work with market makers, find pools of capital. So I mean, they obviously, as an exchange, they work on the issuer side, but also on the investor side, and so it's always just creating a better experience for their clients.
So looking at your stat sheet again, I mentioned Goldman Sachs, then co-founder Gold Money,
Yes.
co-founder Minet Investment Jewelry, that I love, full disclosure, and now Abaxx.
Yes.
Right. Tell us about Abaxx, because
Yes.
you're looking to be a disruptor in how metal prices are traded and priced.
Exactly. So
Why?
So that's the big vision, of course, and we can talk about the steps to getting there in the business. But yeah, I mean, we do believe that as trillions of investment needs to go into hard physical infrastructure for call it the energy transition, call it the next capitalization or commodity investment cycle in electrification and decarbonization. We need a lot of physical infrastructure. And in our view, we can't just have another race to the bottom where a company like, Robert Friedland's one of my largest investors. And of course, building, what will likely be the second largest copper mine in the world. This is about a 26 year endeavor. And he's built, one of the cleanest, one of the most high tech, one of the most, socially forward, mines on the planet. But he gets the same price as a dirty copper mine somewhere else, right? So at the end of the day, yes, a commodity is a commodity, but we believe that in order to attract the capital that's needed for the serious underinvestment we have in natural resources, we do believe that there needs to be more data, more transparency of where these commodities come from, and get a premium.
Talk about being opaque. Talk about an opaque market.
Exactly.
But why the massive bet on copper?
Well, look, copper is just such a bottleneck to everything, everything being done in the energy. Well, let's focus on electrification. It's just as a key part of growing, whether it's alternative energy sources for transportation, just having. There's just not enough copper, to make this happen. I mean, we're already underinvested in copper, just to sustain our current economy, global growth. But now, if we want to actually increase the rate of electrification off of hydrocarbons, we're just nowhere close to having enough copper.
How can copper help us fight what's going on outside right now?
Yes, no, it's quite smoky, and I'm actually, this, kind of, it's personally to me. I mean, I grew up in Colorado, and and our family lost a cabin in the wildfires a couple of years ago. So I mean, these fires, and yeah, I mean, look, we're stretching, we're stretching our planet. That's for sure. And so, again, I think thinking longer term about our commodity infrastructure is very, very important.
You mentioned the opaqueness, right? So let's talk LME, because obviously there was a lot of fury when the LME just halted trading, on nickel just over a year ago. Thoughts on that, and how can you help overcome this happening again?
Yeah, this is kind of the problem with, sometimes when there's a little bit of a lack of competition, right? So that nickel market effectively broke, over a year ago.
That's right.
And no other exchange has really proposed an alternative, right? So there really isn't another nickel market to be working at that scale. So, and I would say, again, this is the reason that Abaxx exists. It's not so we can go challenge exactly, necessarily existing markets, but looking at where we believe the commercial needs are not being met. Liquefied natural gas is the main project, product that we've been working on to build a benchmark and a futures market for LNG. But while we've been building that, we saw what happened in nickel, and the market came to us as people that develop physical markets and said, look, there is no alternative right now. And so for the last probably 6 months, we've been working on a battery nickel contract, to a futures market and a benchmark, to sort of compete with what the LME is doing as an alternative.
I know, in past conversations you've said that gold pricing has its own set of issues. Talk to me about those issues, and do you think a change is needed here on the gold front?
Yeah, so also problematic market structure because getting a little bit technical here, but gold is very interesting in that you have like a very robust spot market, the LBMA over-the-counter market, and the actual clearing that happens, for the final settlement in the vaults of the London vaults mostly. And then you also have the forward market, which is used for hedging, which is the COMEX, right? And so there are actually two different markets that when they break out, when the price becomes different, it causes a lot of problems for the gold supply chain. And what's happening currently in the gold market is the LBMA, that physical clearing market, is down to just one or two firms, and they're kind of moving away from London, more to New York or Switzerland. So you don't have a robust market where everyone can access the center of the market. It's usually 3-4 layers deep that you're actually accessing the market. Where in energy markets, like you get a very robust energy market like WTI oil or Henry Hub natural gas. Like it's so dynamic and so many people can access the center of the market because these futures contracts go to delivery. But in gold market, we have some problems in the market structure.
Specifically to spot price, how can I not ask you, Josh, your take on why gold can't hold 2,000, stay there, and keep moving higher?
We're in this very interesting macro inflection point, obviously, where there's a lot of uncertainty, inflation, deflation. I feel like we've been having this debate for so long. But I think what people miss is I think this transition to what I believe is going to be kind of a medium-term or even long-term supply shock in the commodities space, which means structurally higher inflation. I believe what that actually brings is volatility. It's not necessarily inflation or deflation. It's just that we're going to go through a period of heightened volatility. And so gold, I think, it's reflecting that, right? It goes to 2,000 people. There's no way it can't go to 2,500. And then all of a sudden, a month later, there's no way it can't go back to 1,800. Right. So we've got this extreme volatility happening.
Supply shock to the commodity space, specifically which commodities? Well, who will feel it most?
Well, I mean, I really think it's across the board. I mean, we're so underinvested in almost all commodity infrastructure. I'll take just basic energy, like forget the energy transition for a second. We're down from about $2 trillion a year being invested in just global energy infrastructure. We're down to about 1.5 trillion. So, and we haven't shrunk demand. In fact, it's still growing, right? And so we're just chronically underinvested. And now we're in this new environment, which investors haven't been used to for so long, with higher volatility and higher interest rates. And managing working capital becomes very different. So we're just in this totally different environment, and the capital is not hitting the market like it needs to. So more supply shocks ahead.
Do you see the need for silver? Do you think it should be classified as a critical metal?
I haven't ever really got into that debate. I mean, obviously, you know more about this than me, but silver, has that industrial use as well as the store value precious metal use, and so it does get consumed a lot more than the other inventories of other metals. So I'm not sure if it could be called a critical mineral in the current supply chain, but I could see with various technologies in electrification, obviously silver is also a very good electrical conductor and may have new inventions in utilities. There's so many products that are yet to be invented, in this decarbonization.
Talk to me about base carbon, and talk to me about all these carbon credit companies popping up. It can be overwhelming for investors. I get a lot of emails saying, like, how do I know who to invest in? What should I be looking for? Insights here.
So we think that one of the key parts of the energy transition is the carbon financed sector and decarbonization. And it's important for two reasons. One is it starts pricing in these types of environmental costs and externalities. So again, talking about, if you've got a cleaner mine, getting a premium versus something else. We think that's going to be increasingly demanded, through the supply chain and consumers. Now, admittedly, it's not quite there yet, right? There's been a lot more talk than actual price or action from the end consumers. But we think that mechanism of decarbonization finance is critically important. And I don't mean just sequestering carbon, through forests or avoiding removals or engineered carbon credit, but actually the mechanism of getting more capital into decarbonization within the supply chain. So we think of base carbon more as a facilitator and a financier of real industrial projects. Now there's aspects of social health and benefits that also come along with a lot of the current nature-based and carbon avoidance. So base carbon is now it was a company that spun out of Abaxx, and we keep a 2.5% gross revenue royalty on top of it. But that company is now cash flow positive. Based on a project that was done with Citigroup in Vietnam.
Okay, I was going to ask you the connection to Abaxx, but it was spun out of there. Fantastic.
Yes.
Josh Crumb, thank you for stopping by and for giving us the lowdown. I appreciate it.
Yes, thank you so much.
And thank you for watching. We'll have more great content coming your way, so be sure to stay tuned to the Daniela Cambone Show and sign up at danielacambone.com to stay on top of it all. That's it for me. Thanks for watching.
Opinions expressed on this program are solely those of the contributor and do not necessarily reflect the opinions of Stansberry Research, its parent company, or affiliates.